Hey, what's up guys? John here. Home prices are collapsing across America slowly.
New data shows U.S. home prices are dropping at a historic level.
Every single month it's getting worse and worse and worse. Many home sellers are in denial about what's happening, and many home buyers are priced out of the market entirely. But what if I were to tell you something massive is happening, and it's going to rock the real estate market? I mean, it's going to be like a Mike Tyson type of KO knockout that's coming for the real estate market. Look at this. So, alert. Median home prices are contracting aggressively. In just 2 years, the percentage change has gone from over 20% to down 7.9%, negative 7.9%. This is the sharpest collapse on record. Current levels have only occurred 2 times in the past 60 years, 1970s and 2008. Both instances ended up with equities declining more than 30%. Now I'm going to show you what's about to happen to home prices, what's going to happen in the rental market. It's going to be a massive wealth transfer and a massive opportunity for smart and savvy and new investors to go out there and make an absolute fortune. Please hit the like button. When you hit the like button, YouTube will share this content to educate other people about what's really happening. And if you'd like to fix your credit to position yourself for the greatest real estate investing opportunity of all time, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com, book a free strategy session below. And if you'd like, you could also have Erica review your credit report with you in full. She'll look at everything. She'll see exactly what's going on, tell you roughly how long it would likely take, tell you what the best approach and strategy will likely be, and answer any questions that you may have. You will have to sign up for a credit monitoring service. They will charge you $1 to pull your report. But when that doesn't go to us, it goes to the credit monitoring service. So if everything sounds good and you'd like to move forward, we'd love to help you fix your credit. And if not, no worries, we'll cancel you, won't charge you a penny. So you can find more information at GreatCreditFast.com in the link below. Take a look at this. So here, first and foremost, Destin, Florida. 136 homes for sale with a price cut. Look at this. I mean, Florida the last couple of years has seen a boom in pricing. Now, with insurance and taxes and everything that's happening, people are looking to escape. You have Big Bear, 139 homes for sale with price cuts in the last 39 days. Palm Springs. Now, what did Palm Springs and Big Bear have in common? Second homes. They're vacation homes. They're trying to get out from underneath of these properties. Because what do people do generally when the economy contracts? They try to pull back where they can, right? They try to liquidate things they don't need. That's why when you're looking at Big Bear, you're looking at Palm Springs, you're seeing all these price reductions. That's the beginning stages of a massive change coming to the housing market. The housing market is starting to crack. Sellers are cutting prices at record levels as you can no longer price based on where sales were. There's something frozen about this housing market. Zoom towns like Boise and Austin aside, home prices nationwide have just refused to drop. Existing home prices are on their 7th consecutive month of growth, according to S&P. But a leading measure of home values over the past 30 years, the average U.S. existing home prices are up nearly 6% year to date and 2.6% year over year, which is well above the median full calendar year increase in more than 3 decades of data, according to Case-Shiller. But what they don't say here is that sales volume is collapsing. Sales volume is collapsing. Now, a lot of property owners have these 2, 3, 4% mortgages, and they're trying to hold on, and they have their properties listed at a very, very high price, hoping to find a buyer. But they're unable to find these buyers like they were a couple of years ago. And so what's happening? You're starting to see sellers starting to become much, much more open to having a conversation about dropping their prices. The challenge of soaring mortgage rates and home prices aren't just impacting buyers, they're plaguing sellers too. Even with limited existing home inventory, a record number of them dropped their prices on their listing in October, according to a new Redfin report. Nearly 7% of all homes in the U.S. posted a price drop during the first 4 weeks ending October 29th. Which is the highest portion since Redfin started tracking the data in 2012, and far surpasses the 3.6% of homes that lowered their price in the average month. This 11-year record comes as mortgage rates have steadied between 7.5% and 8% this past month, the highest they've been in 20 years. It's important to note, however, that even with last month's drops, home prices are still up 3% year over year. Well, for now, right? For now. When you're looking at what's going on with wages, right here, the blue line is wages, and the black line is inflation. Now, they say inflation is 3.7%. I'm not sure if you believe that figure, but that's what they're saying it is. But if you look at real wages went up during the Great Resignation, and now they're starting to come down. Yet I personally believe inflation is far above where wage growth is. Now, when you're looking at what's going on here, it says total property taxes. You're seeing property taxes skyrocket, up 4% across the U.S. 2022 to $340 billion. So you're seeing taxes skyrocket, insurance is getting out of control. So where home insurance, and this all connects as to what sellers and property owners are going to be forced to do and what new investors need to pay attention to. So where home insurance prices are rising fastest, here are the top 5 states where home insurance got more expensive from May 2021 to May 2023. Florida up 68%, New Mexico 47%, Colorado 46%, Idaho 46%, Texas 46%. And then of course California, you had a lot of really big insurance companies leaving California. Now what is ultimately going to happen is we're going to see more cost incorporated into owning properties and more companies filing bankruptcy, more companies and employees of these companies being forced to sell off their properties. Large corporate bankruptcies filing surged in the first half of 2023. Increase in large corporate bankruptcy filings driven by companies in retail, trade, services, manufacturing. The increase in large corporate bankruptcies in the first half of 2023 marked a reversal from the gradual decline in filings since the start of 2021. So, when you're looking at this surge in large corporate bankruptcy filings in first 2023, it's consistent with economic conditions posing heightened bankruptcy risk for highly leveraged companies, which is, I mean, let's face it, in America, almost everybody is highly leveraged, every entity, right? So when you're looking at where borrowing costs are, you have to look at it from the perspective of a home buyer and a renter. You know, when you have this situation like what we've walked into in 2021 and early 2022, where you saw record demand for home ownership, second homes, Airbnbs, rental properties, everyone wanted to invest in real estate, right? Well, now, when you're seeing borrowing costs, the average credit score in America is 698, of around 8.5% on a $500,000 property with 6% down, 8.5% mortgage rate, that's $4,300 a month. So you would comfortably have to make about $14,000, $13,000 a month to be able to afford that property. Why would somebody spend $4,300 a month when they could rent for 52% less? It's a big question, right? It's a big question. It is now 52% more expensive to buy a home, right, than to rent one. 52%, so 48%. So you start to look at how much extra would cost you just to own. Then you look at what's going on with apartment construction. New rental apartments construction in the United States expected at a 50-year high in 2023. According to a report by Rent Cafe, nearly 461,000 units are expected to be delivered across the U.S. this year, meaning that over the past 3 years, 1.2 million units have been built and brought to market. So when you're looking at this and you're seeing rents are falling, you have to ask yourself, what does this mean for home sellers? If they're looking at an economy where the job market is softening and real wages are softening, yet inflation is increasing and borrowing costs are rising, what do people generally do in that type of circumstance? Well, they look to save money. And why would somebody spend twice what it would cost for a roof over their head to buy than to rent, right? So what I believe is going to happen is we're going to continue to see a smaller pool of buyers that are going to want to buy and more sellers that are going to be forced to try to find that buyer. So supply and demand are going to have a very, very big impact on the housing market. That's what we're walking into. But there's something very fascinating that some people may say, John, this isn't going to happen. It's not going to happen. There's no way. They've been talking about this for decades. It won't happen. I think it actually could. So if you look at, it's not just China doing this, right? So China sets sights on mass producing humanoid robots in 2025, all over the place, right? They're talking about this. And what they're saying here, it's fascinating because you see what they're saying here, but I'm going to show you what Bill Gates, Jeff Bezos are doing and what Elon Musk is doing. They're all doing this at the same time, right? So it's worth paying attention if some of the wealthiest people on the planet are all doing the same thing and all saying this is what the future is going to look like. So Chinese government wants to mass produce, and you have to think about what this would mean for real wages and what this would mean for servicing debt and the amount of layoffs that would likely ensue because of these changes. And so the Chinese government is pushing mass production of humanoid robots and apparently wants it done in an astoundingly rapid timetable. As of the South China Morning Post reports, the country's Ministry of Industry and Information Technology has issued a 9-page advisory calling the country's manufacturing sector to establish a humanoid robot innovation system, make breakthroughs in several key technologies, and ensure a safe and effective supply of core components by 2025 and become the global leader in tech by 2027. So they set a goal to be the leader in humanoid robots by 2027. Well, interestingly, Elon Musk is saying that he's going to start selling in 2027. So you have to think about it this way. All the craziness we're living through right now started really in 2020, right? That's when everything really ramped up. In about 8 months, about 7 months, that's going to mark a 4-year anniversary. So it's been 4 years that we've already lived through this. Now, in about a month and a half, we're going to be walking into 2024. So it's only be 3 years from 2024 to 2027. So you see how fast this is actually coming. This is happening. It's basically tomorrow. So it says that the MITT is specifically looking for the industry to develop. Bear in mind, there may be some translation issues here. The brain, cerebellum, and limbs of a humanoid robot, which, according to the SCMP, will be aided by recent leaps in artificial intelligence capabilities. The ministry also called for these robots to be usable in harsh and dangerous conditions, though neither of the newspaper nor the translation of the advisory viewed by Futurism spelled out what kind of conditions Beijing is talking about, but the country's past forays into the development of firefighters, police robots. I mean, you saw, I'm not sure if you did, on TikTok and on Twitter, there's a clip going viral. They used a humanoid dog robot to get someone off of a bus in Los Angeles last week. Suggests that this may be more infrastructural and less military than some Jegnas warned, right? They say that that's being said, both the United States and China have been racing to develop so-called kill robot warships and fighter jets to menace each other. But when it comes to humanoid robotic soldiers and even more freakishly integrated robotic humanoid soldiers, the U.S. is likely to have a major edge over Beijing. So, I mean, some of this stuff that they are talking about doing, like here, for example, though in nearly a decade we've seen so much a way of robotic firefighters being deployed into actual battlefields just yet, unlike the hoo-ha American counterparts, China acknowledged in the advisory to go to the level of mass production they're seeking. Humanoid robots must be significantly improved so that a safe and reliable industrial supply chain system will be formed and industrial ecology of international competitiveness will be constructed. So you start to look at what they're talking about and you start to see, I mean, look at this. So here, this came out 3 days ago. So 3 days ago, they said right here. So they said that this will also make plans to establish reliable industry supply chain systems to support the manufacturing of humanoid robot and robotic arms, hands, feet. So when you start to see all these different changes, artificial intelligence, you start to see what's happening. You have to look at what Bill Gates is doing and Jeff Bezos, because it's very fascinating. They're working on a brain implant startup backed by Bezos and Gates is testing mind-controlled computing on humans, right? Now, in the beginning, they say, you know, this is for people that are paralyzed and people that really need this. But Elon Musk is also working on Neuralink, right? So we're walking into this big structural change, the fourth industrial revolution, as they call it. You have to ask yourself this question. If we're walking into this, how can current debt levels, household debt levels of 17.3 trillion stay intact with the amount of layoffs that are going to be coming? I would bet that it's going to be very, very challenging, right? It's very unlikely. So what I think is ultimately going to happen is we're going to see a gradual erosion of property values. And I think what we're going to start to see here is a lot of commercial landlords and investors that have to refinance their deals with much higher interest rates, higher taxes, higher insurance, and sagging rents. It's going to be a problem. A lot of these people are going to be giving the keys back to the bank. And so if you're an investor looking at this, you're able to walk in and essentially pick up a bunch of deals that are about to get massively repriced. I think we're going to see a big opportunity for a lot of people to make a lot of money. Some people are going to be, leveraging technology. It's going to go far past ChatGPT. I mean, that's the first inning. When we're starting to walk into this, you have to realize that the entire way in which we live, the entire way in which we do business is about to change, and with it, so will property values and everything else. What do you think? Drop below, hit the like button. If you'd like to fix your credit, we'd love to help you in my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com. Put yourself in the best position possible to advance and to get loans, to be able to invest while you can. Because in the next couple of years, I believe this massive wealth transfer will present a huge opportunity for a lot of people to make a lot of money and isolate themselves from a pretty hectic future. And some people will ignore it and say this will never happen. But I think the facts speak for themselves. What do you think? Drop below. We'll talk about it. I'll catch you in the next video.